Hi everyone, welcome back to this video. A lot of people are tense and worried about what's happening in the stock market with the fears of recession and bad news on the horizon. To understand the situation, let's zoom out a bit and understand what's happening in the market right now. There are some major triggers that led to downfall of the market. The first one is Israel-Iran war, but if you see, it is not a major trigger anymore because it is already factored in. Unless some fresh news is coming about the war, this is not a big trigger anymore. Crude oil prices. If you see the crude oil prices for the last few months, it has rised up. But now it has been stabilized and we can see it is not that bad right now. So what's the big trigger here? If you see the quarterly results, it is not up to the expectations. But people need to remember this is only one quarter results. So it does not imply much correction is going to happen. One underwhelming quarter does not imply a correction is on the way. So if you see, there are some global tensions here and there, and there are a lot of opportunities present in the market right now. Because if you see, in the Bangladesh, there was a textile problem because of their geopolitical issues. There was a textile problem there. If the crisis continues, it benefits Indian textile industry as international demand shifts to India. And I can say there are a lot of reasons that why FIAs are taking out their money. Because at that time, at the last, if you see the last 2 years, at that time, China is not doing well. If so, FIAs had no choice but to invest in India. However, the China economic revival is again a big story. We are not going to discuss now, but now the China is reviving, and there are a lot of discounted stocks there. So FIAs are taking out their money and investing in China. But you should remember that FIAs will eventually stop the selling, right? I don't see a massive correction here in a massive correction as of now. But even if the worst case, the support level as I showed in the previous video, that is 23,300, it is almost only 4% down from now. From the all-time high, it is 11% correction. So 10 and 11% correction will be always good for the market in the bull run. Despite this, we had a two crucial supports. Okay, so the first support level is somewhere around is 24,141. As of now, as I'm seeing in the market hours, it is touched and it was at the same support level. Other support level was 23,300. If it breaks, there was a major support level at 22,987. So if you see in the worst case scenario, the market go down up to 4.79%. The key takeaway here is you should hold the stocks in these type of fluctuations. The market may dip 1,000 points from the here. So should we sell everything and go away? Absolutely not, because there's always a chance that market can only correct by 500 points or less than 100 points, or it could be bounce back from here itself. So the timing of market is impossible. So I have been asked if now is the time to stop SIPs. The answer is no, because in the falling market you should increase the SIP, and in the bull market, when the Nifty is all time high, you should reduce the SIP. Now this is the time where you should invest in SIPs. Okay, timing the market is impossible, and if you ask me, there are several good companies like HDFC, Kotak Mahindra Bank, IDC, TCS, Reliance Industries. There are a lot of good companies out there which are at major support levels. If you invest here, you can enjoy the bull run in the next few months. Please make sure that you subscribe to the channel, hit the like button, and feel free to ask the questions. Thank you guys. Bye bye.